Hi, let's talk about Chembio Diagnostics, the company that went up nearly 200% this day. So the company, together with its subsidiaries, develops, manufactures, commercialize the point-of-care diagnostic tests that are used to detect or diagnose diseases. Market cap based on previous day's close 41.7 million. The simple Wall Street marks as a snowflake, so there's a pretty much red on here, and risk analyst says that it has less than 1 year of cash runway, currently unprofitable and not forecasted to become profitable over the next 3 years. And yeah, this is actually the small cap company, and the simple Wall Street marks as a not meaningful market cap. Anyway, latest share price and events, so they raised some of the capital. They were annual general meeting, product updates that are causing the market performance. Anyway, this is basically the numbers are coming from the previous day close, which were, I think, so if we look at this screen, the close were 206 and currently it's 5.93, so they pretty much made almost 200% in single trading day. Anyway, based on the previous day close, 1 year return is minus 62%, and we see the 3 year frame minus 81%, 5 year minus 67%. Of course, those numbers are not beating the industry, neither the market, and long-term price volatility considered as highest. The industry itself, so it's US medical equipment and healthcare industry, is less volatile than the average market volatility. On the valuation side, we see here that it has no data to calculate it. TipRanks shows that current analyzed price target is $4 per share, so it has currently 32% downside, and yeah, I think 12-month forecast is same. The Market Watch has a little bit better stock price target. On a good scenario, $8 per share, low scenario is 4, average of 6. So this is actually very near to $6 per share. So the stock price targets went pretty correct on this share. So those who went in yesterday, they are enjoying this almost 200% gains. And of course, those who entered mid-February when the healthcare and biotech companies were on the peak, there are, let's check it out here. So they are minus 24%. This is actually the volatility that I'm talking through my videos. You could enter here guessing that it could be reaching $10, $20 per share, and then once you're in, there is possibilities that it could drop, so 40% minus, 50, 60, and then you go, then even 70, 74. So many people could emotionally sell at that loss. The next day you are minus 24. So this is actually, if you failed, so if you invested, as I recommend, not more than 1 to 5% in volatile share price, not more than 1%. If the 1% of your investments are dropping, if you check the fundamentals of the company, if you check my videos, I pretty much reviewed the technical review and also the fundamentals. There is possibilities that you may add some more shares. So you buy here, so diversify by time, buying at $8 per share, then you're adding by $3.5 per share, then more on 3, and it lowers your average point. And when the stock price going up, you could profit. For example, if your average of 4, So you were buying at 7, you were buying at 3.4, you were buying at 2.5. On average, for example, $4 per share. There's a plus 50% up. So many of young traders, investors are investing, for example, at the highest point, and then when they see minus 60, so it's psychologists, it's hard to see those numbers at your portfolio. So they're not adding, they're selling. But anyway, pretty much in good scenarios it could reach $8 per share, as we saw in, for example, January 26th, highest point 8.75. So I think there's a tunnel. So the lowest point 2.5 till the 8.58 maybe. So if it drops back to the 2.5, there could be very good buying opportunities. And the future growth for the company is forecasted 25% annually. The company is unprofitable currently. The earnings per share growth is forecasted to grow, but it's not forecasted to be profitable in the frame end of 2022. And past performance, historical annual earning growth decreased by 25%. So we see here the dynamics, so they have pretty volatile revenue and the earnings are declining. That is pretty much risky investment itself. Financial health side, we see that they took some depth. Current situation shows that debt to equity ratio is 78%, and the cash level that they have is not covering the debt. So cash 14 million, debt 18, equity 23. So pretty not so bad situation, but it could be better. Balance sheet looks green mostly, but there's depth almost half as equity. They're not paying dividends and insider transactions, so do we have no volume, so no transactions. Ownership breakdown: general public holding 62.7%, institutions 28%, insiders 8.4%. Top shareholders, we see Vanguard Group decreased, and so there is actually on both sides. BlackRock decreased by 84%, and that is not looking good. I'm not sure if they loaded within those last week, for example, but anyway, they're showing the latest reporting holding date 31st of March. So it's actually pretty volatile share. And Simple Safe dividend shows that shares outstanding keep increasing, not so significantly as companies that I review with highly volatile share prices. Total sales are volatile, but they are not doing that bad. So it actually increased by 5% compared to last 12 months. And investing.com summary the stock for long-term investors as a neutral. Moving average buy and technical indicators strong sell. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.